Hi there, Serial Trader here. Let's check in with our major US markets here. So Friday was certainly another strong down day, and that should come as no surprise to anyone that's been following along here. Now, I am still leaning most heavily at the moment on this current wave interpretation where we have a significant fifth wave in place, a top in the market in January. And then we have these two impulsive waves down. We have a one down, then a two up correction, and then a one down, two up correction of one lesser degree. And now we're potentially kicking off a third wave of a third wave, which should be quite a strong decline if that's the case. And certainly yesterday's trading continues to support that idea with a nice strong day to the downside. But as far as truly invalidating or validating a wave count, so the only thing that can confirm or invalidate an Elliott wave count is price itself. So this count, even though I'm currently leaning on it, okay, we had this count, and this count is still possible until this low gets taken out. So that low is 25.53.80. Okay, so that is a line in the sand. You take this out, we no longer have a triangle in play as it's labeled here. And same with this wave interpretation. You take this truncated C wave out, if that's the correct labeling. And again, that same level, 25.53.80, you take that out, and then we're really looking like this is the scenario that's taking place. Let's just say the probability, while it might be moderately high at the moment, this is the case. If we take out this low, it becomes extremely high. But from a trading perspective, I like to try and get a jump on what I think is going on, while of course still limiting risk against a specific level. So at the moment, the current peak here that I have labeled as wave CF2, that 27.17.49, that's a must-hold level to stay immediately bearish here. And okay, what is also the level where this count becomes invalidated? That would be this extreme here at 28.0190. So I'll be forced to turn quite bullish if we take out 28.0190, and that would confirm this count, this bullish count, or possibly this count. Now these two counts, you're kind of splitting hairs. Either one is bullish and either one has the same kind of outcome, so who cares? The fact is, if you take out this extreme, 28.0190, then you can start getting quite bullish, okay, and aggressive. But we're nowhere near that, and of course I'm currently favoring this. So, hang on. Let's go to the Thinkorswim. So I had this trend line drawn that was acting as support on the way up from this 25.53 bottom here, right? And we decisively broke that trend line on Friday and closed well below it. And we closed below the T line, okay? So those are all very negative developments, at least short term for this market. And I'll continue to emphasize just how nicely we rejected off that Fibonacci area, that 618 retracement, as well as the AC equality relationship. Very nice. And the oscillator is just starting to roll over now after becoming overbought. That tells you there's plenty more room to the downside before you'd start getting, oversold. We're nowhere near that point. So it's kind of a green light for more downside until the market proves otherwise. And with that close below the T line, that's also just, again, a good bearish development. Now let's head on over to the Dow Jones Industrial Average. And I'll just point out, we closed below the T line on the Dow Jones as well, and really in a similar spot as SPX is. Not too much else to say there. NASDAQ Composite. Again, we closed well below the T line, and just really in a similar situation. All three indices, and that's after rejecting nicely off that 618, and that not even quite a gap fill on the NASDAQ. So looking quite bearish here until proven otherwise. The VIX So the VIX is starting to show some life, although nothing dramatic yet. But that's three, increasingly higher VIX levels for the last 3 days. So obviously, if equities continue trending down, VIX will continue trending up and possibly spike up if we break a significant level in equities. All right. And I'll just point out a couple things here. So let's look at a price chart of Apple. So of course I look at the indices as being kind of the ultimate barometer for what's taking place. But when you look at really large cap names, and they have bearish setups as well, that just kind of adds to the bearish fuel if you're leaning that way on the major indices. So if you look at this on Apple, I'll zoom in a little further. So on Apple, we had an island reversal, and the significance of an island reversal is quite high. That means you had a gap up, and then you had a area that you traded in, and then a gap down, and you can draw a horizontal line across the two gaps and touch nothing, just nothing traded in that range between the two gaps. So that's an island reversal. It's quite a powerful reversal signal, and okay, so you had that gap down, and then we had another gap down and another strong day down. And now Apple's sitting right on its 200-day moving average, which if I was a betting man, I would say that is likely to break quite shortly here, and possibly going down to retest those February lows in Apple, or even exceed them. And also the volume is increasing on this big down day after a gap. That's quite bearish. So when you have an individual name like Apple, which is so heavily weighted in the market, and it's looking this bearish, that's something to take note of. And also, okay, Amazon, I noticed the pattern on Amazon. So if you look at this, let's zoom right in here. Okay. Where do I want this? Let's look at that like that. Okay. So on Amazon, we had a gap up from Wednesday to Thursday. And then on Friday here, we've done a bearish engulfing and closed that gap. Okay. So for a name like Amazon, and if Amazon has some downside in it, if Apple and Amazon drop significantly, you can only imagine how much weight they actually have on the broader market. I think those two stocks alone, what they represent, of the major indice, like S&P 500, it's quite substantial. So if these two names go bearish and decline, you can almost be certain that that'll be quite bearish for the broader market. Basically, if the FANG stocks, Facebook, well, you can Facebook, Apple, Netflix, Google, or Facebook, Amazon, Apple, Netflix, Google, if you want to have two A's or one A. If those are going down with any kind of significance, you can be rest assured the broader market's going down with them, just because they represent so much of the overall market cap. So I thought I'd just point that out before I end the video. Interesting times. Next week should be significant. Next week we either form some sort of support area and then reverse, and then the bullish scenario is in play, or we continue confirming the bearish scenario and just keep dropping and dropping and dropping. And I'll certainly be covering it actively. Now, as far as follow-up action on the trades, so I neutralized the delta after Thursday's bearish day, after making some nice gains. Now, with Friday's action, I've allowed it to gain negative delta again. So once again, I've allowed the position to have a bearish bias. And I think that's warranted to leave that in place for now. But I'll certainly update things as we go along. So yeah, let's keep a close eye on this market. It's an interesting juncture. Serial Trader signing off.